Hey, welcome back to another edition of Forex Tech Magazine. It's your host, Lewis. Hope you're doing well. Today is January 8th, 2019. Man, we're already into the new year. Hopefully you guys have been able to make some money so far. If you haven't, sit back, don't worry about it. We're going to go over some potential trades today that possibly could, present some opportunities for you. Before we get into that, though, I want to get into the disclaimer. Disclaimer goes a little something like this. Any and all information that's given to you by Forex or shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share or give you should be considered to be investment advice. If you're looking for investment or / trading advice, our suggestion to you would be to seek out the assistance of a competent licensed advisor. Okay, so now that we got that out of the way, let's get into the reason why you came here today in the first place, and that is to look at some potential setups for trades. Now, this right here is my Aussie US dollar, and before we get into that, we're going to get out of that, and we're going to get into Great Britain pound, New Zealand dollar. We'll come back to the Aussie, I promise. We're going to do all that before the end of the episode. Now, this one right here, as we stated yesterday, it looks like it's kind of in a holding pattern at the moment. It's just kind of going sideways. Right? It's not really going up, not really going down. Just kind of like punch drunk and just kind of rotating sideways. Now, one thing we will say though is that when it came back or when it pullback occurred right around here, right almost at the right at about the 0.618, right? And actually, that long spike that we had, that big sell-off we had the other day, that flash crash, whatever you want to call it, I think it's probably somebody who knows, that's in the know, taking advantage of being in the know. At any rate, you'll see it pulled almost all the way down to our blue line, but it didn't touch it. So that still gives us pause to believe that our take profit is going to be up here, right? If you want to play it cautious, then you could, of course, put your take profit here, right? Or somewhere in between. But I would, for at the moment right now, me personally, right now, just to play it safe, I would probably go ahead and put it at the blue, right? Just because of the fact that this thing is, seems like it's pretty much energyless, right? And just kind of very lethargic, just kind of like just dragging along. And if you're in the trade, I'd probably want to get out of the trade with a profit. And so I'd probably be here. And then just go look for another trade to get into after we get out of this one, right? And that's all. You gotta remember, there's always a trade going on, potentially going on somewhere. You just got to go and find it. That's all. Let's look at a couple things here. Yes, the price was going down. This is pullback. And it came up to support resistance here. All right, and so what I'm doing for you folks who may, for the uninitiated, what I'm doing right here, I'm looking at finding support resistant lines in the market, and that just kind of helps me determine whether or not some of these fibs is popping up is really more or less something that's realistic, something that we should be, that we think we could possibly get, or we're looking at an overextended pullback that should be turning around soon. But now these, if you look at it, this is pretty cool. Yeah, these, fibs line up pretty well with U-turns in the market. So you see right here, this right here was once support in the market, and that's where your blue fib is at. And then you can also see what price used it as support before, and price used it as it's like a little bit of resistance, but definitely some type of support here afterwards. And then you look at the red. Also, this is an area where support, price came down, bounced back up, and there's also area of resistance where price tapped it and went back down. So these can be looked at as some significant areas of support resistance in the market. So yeah, it's potential to hit it. I would probably go ahead and tag the blue one as far as my take profit for right now, right? And so if you look at it, you got about, let's see here, that's 321, yeah, 300, yeah, that's 313 pips. My goodness, man, don't be greedy, right? If you can get it from where you at to there, it's 313 pips. Yeah, it's 480 pips at the other one. So it's only another additional 100. And I just rounded up. Let's say it's 170 pips more, right? Or 167 pips more. You know, why risk 300 some pips for 167? You wouldn't do it, right? It wouldn't be smart, right? So you want to risk 313 for 160 pips. So go ahead and take the the low hanging fruit, get in, get out. What would be your overall risk reward ratio there? I mean, this is key to determine whether or not a trade is something that you want to be in the first place. It's almost a 1-to-1. I mean, you're risking 307 to get 313. It's a wash. I mean, it's a 1-to-1 risk ratio. Pretty sure you can find a better trade out there, but if you feel like something that you really want to do, I mean, you can go for it. It's slow moving. So therefore, it may take it a while for it to hit. Like I said, before, like we was talking about yesterday, this information is going to be coming out of the market over the next couple of weeks or so. That's going to cause, it's going to be a catalyst for some of these great Brent pound pairs to start pushing in the direction. So you maybe want to wait till then. Looking at it overall, is it on the buy side right now, or is it on the sell side of things? It would appear to be on the buy side, but and what I'm doing when I look at the buy side, all I'm saying is, you see this trend line where price is moving down. Well, when price crosses over that trend line, then it's on the buy side. If price is below that trend line, then it's on the sell side, right? Because as you see, it's still going down. Hits the trend line, right? Proceeds to go down, then it comes back up through it. So usually when it's on this side of the trend line, it's an indication that we can buy, right? Right, you just look for those opportunities where you can get in, buy, right? Price goes up. So we're definitely on the buy side of things. Mainly what you want to do is find your swing high or whatever, and then look for your crossover entry, and you can buy it and put your price target up there. If you want to, like I said, it's not a. I think there's better trades out there potentially. So it's one that you could make, but not necessarily one that I say that, hey, you got to do this one, or I would recommend this is the hot pick for the day. You know what I mean? But if you got some time to kill, you got a little bit of room for some pullbacks, whatever, maybe something you want to entertain. I don't know. Let's look at the next one. It's Great Britain CAD, Great Britain pound CAD, Canadian dollar, right? So this right here kind of fell into place like we spoke about. As you can see right here, price was moving on an uptrend. Not gonna look at the I'll go back. So it had been pacing itself, moving up for a while, right, with the fibs. But then after that huge pullback, that spike, it actually closed or went below our A. It didn't close below the A, but it did go below the A initially, right? And because it went below the A, we just said that this particular trend is dead, right? So then what you do is you go back, you put your fibs here for this price movement. So finally, after a couple of retests, tough when you have your extension in these areas sometimes, because price has a tendency to bounce off support and resistance. So price could just come to this level here and then bounce up. So me personally, what I would do, if I was in this trade, and not telling you this what you have to do, if you're already in this trade or you're thinking about going into this trade, there's about a 30 pip difference between this level and this level, right? Personally, what I would do is I would put my take profit probably here on this first level. Wind up losing out on the 105, right? Trying to get the extra 30. Just get the pips, walk away. There's better trades out there to be made. Now, the question that I would have for you You know, do you think that it'd be worth it? Because remember now, we're looking at prices already crossed above the B, right? So that means that you could theoretically put your stop loss back at the C, right? But it's 206 pips stop loss, and if we go back above the A, it's even a lot more than that. So the question would be, you know, at a minimum, are you willing to risk 206 pips to get 105, right? And that's only a question that you can answer for yourself. Does it make sense to you? For me, it doesn't necessarily make sense. But given this particular setup right here, where you're seeing that you have a high, you have a low, you got a lower high, lower low, lower high, potentially lower low, all right, and then it might be another lower high. The price may be making this move down. Even though it's kind of a weak move down, it's just kind of take its time getting there. There's a possibility it's going to get to here, and when it does, you know, you want to take that profit. And like I said, it still could push through. I mean, 30 pips is not that big of an area. It still could push through, touch it, and then, you know, bounce back up. But the question is, you know, what do you want to wade through? What do you want to risk through, right? And once you get that, you know, your comfort level is going to be different than my comfort level, different than somebody else's comfort level. You just got to figure out where your comfort level is, and you know how to proceed from there. Okay. Then, oh, no, I want to do the next one. Great Pound, Japanese yen. All right, so same thing. Okay, so last night, once again, we went through this one right here. We put our fibs on, right? Showed us where AB was at. A, this is our B. We drew out our trend line. We said our C could be somewhere over in here, potentially. Didn't really know yet. But as you can see, we drew a trend line. Price crossed over to the buy side of things, right? So once it crossed over to the buy side, they gave us permission to buy. We see our D extension is here, right? And we see it crossed over while we were still on the red pullback, which means that our target is going to be here. And then we also noted a couple of other things, which is pretty cool, essentially, when we did this, which was the fact that we had a downward trend going into play, right? We had a support resistance coming across the top here horizontally. And so the question was, well, you know, can we have faith if the fibs drew up here someplace, right? And just so happened, you know, our fibs came in right there on our horizontal bar. And if you don't believe me, you know, what we did is we used the we use an automatic tool. Oops. Clear screen. Use an automatic tool. I mean, if you're not using, like I said, if you knew the Fibonacci's, if you thought about it, but you're kind of scared, you play around with them, you don't think you can draw them quite right. Personally, I like to just hand draw them, but for those of you who are not comfortable with hand drawing them, and you feel like, hey, you know, I want to be able to use it, but I just don't want to. This thing's not letting me do this. You feel like, hey, I want to. There you go. That was simple enough. So I want to do this, but I don't want to hand draw it, right? The easiest thing you could do, right, using this charting software, you just come here, find your low on the chart, click on the low, right, and then it automatically draws it for you, right? Now, this particular one right here, it actually placed it up a little ways higher, right? Let me get back out of here for a second. Oops, go back. Stop. All right, so if you want to, what I like to do is I like to come in here and I like to hand draw. Sorry, I was checking some stuff here. I like to just like to come in, I like the hand draw 'em. The reason why I like the hand draw 'em, just that A, it gives me a better feel for what's going on in the market. Stop it. It gives me a mm, and everybody's different. You know what I mean? So some people like the hand draw, some people like to come in, like to have it done for them. Oops, sorry guys. Trying to get back to my original. Um, all right, there we go. Yeah, and you can play around with it. So yeah, so my original piece was price was going to come back to this support line here, right? And as you can see, right? Price pushes up, bounce off this trend line, right? And you can come in and you can put, you know, the trend lines for it to cross over. Because remember, when price is on the opposite side of the trend line, that means that that's a potential buy zone when we're looking to buy, and then of course the opposite is true when we're looking to sell, right? Boom. What you see right here, price crosses over into the buy zone. Boom, buy up. Boom, buy up. Boom, buy up. Boom, buy up. Right. Um, the other thing too is one of the things you got to watch out for. But sometimes when you come in and you place your original trend lines or even your fibs or whatever, and prices move significantly over the time that you originally done it, you can expect then probably your numbers to be off then when you come back in to do it again. It may be a little bit different. So that's one of the reasons why I like to go in, plot my stuff out, and then go back in and review it later. But keep that same plot that I got there because it doesn't change. Not saying that it's bad or good or anything. I'm just saying that it could. One thing you want to do is try to keep yourself from being, give yourself as many advantages as possible, and don't try to confuse yourself when you're out here looking at all this information. Hold on 1 second, guys. Trying to figure out what's going on here. Having some technical difficulties.